Good evening, good morning, and welcome to the IF Digital Finance webinar, The Digital Currency Future. My name is Lawrence White and I'm a consultant in digital finance at the IIF with a particular focus on the Asia Pacific region. Thank you all for joining us today. Before we begin, a few points of housekeeping. Please note that this is a public event and the discussion is on the record. It will be recorded and we'll post a recording on our website. If you have questions during the webinar, please use the Q&A button at the bottom of the screen to submit those questions. We'll try to answer as many questions as time allows. Unfortunately, attendees who join by phone will only be able to listen to the webinar and not able to submit questions. We're going to keep the program moving quickly so we can end on time. Just a few remarks from me to frame today's discussion. COVID-19 has clearly had a big impact on consumer payment behaviour, driving a rapid shift between payment methods and in particular accelerating the existing trend away from the use of cash. This is part of a broader acceleration in existing digitalisation trends that we have discussed in other IIF webinars. The last 3 months have also seen increased momentum on various digital currency initiatives, most notably discussion papers from the Bank of England and the Bank of Canada, the refreshed Libra 2.0 white paper, the US Digital Dollar Foundation white paper, and the FSB's consultation paper on global stablecoins, such as potentially Libra. All these developments are very relevant to today's discussion, as are the continuing moves by the People's Bank of China, or PBOC, to trial their digital currency. We'll start with China's digital currency trial today, then go on to talk about central bank digital currencies, or CBDCs more generally. We'll then move on to global stablecoins and touch on wholesale payment tokens, and finish off with retail payment innovations in Asia, touching on also on digital ID. So quite a packed agenda. We have a very distinguished panel of speakers today to help explain and navigate these complex issues. Camilla Bullock is the Director General of Emerging Payments Association Asia. The EPA Asia is a branch association for participants and influencers of the payments industry. The association was established in the UK in 2004 and has more than 150 members globally. Their focus is policy and advocacy to strengthen and expand the payments industry to benefit all stakeholders. She holds a master's degree from Linköping University in Sweden. James Lloyd, based in Hong Kong, is the Strategy and Transactions Equity Partner in EY, where he leads the organisation's dedicated financial technology capability across Asia Pacific, with a focus on growth stage and challenger fintechs, financial services industry convergence, and digital transformation. Operating under the EY Parthenon brand, he also serves as APAC leader of EY's global payments practice. He holds 2 first-class master's degrees, as well as various financial and technical qualifications. R. Jesse McWaters is Vice President, Global Digital Public Policy, MasterCard, based in New York, responsible for developing thought leadership on how AI, CBDCs, blockchain, and machine-to-machine payments, among other issues, could impact the payments industry. He is a graduate of McGill University in Canada. I'm going to ask my colleague Conan French to briefly introduce the first topic by level setting on China's digital currency trial before opening up the discussion. Conan?
Thanks very much, Lawrence. So China has continued to really lead the trail on CBDCs. They started researching legal digital currency back in 2014. And since 2017, they've been engaged in testing with commercial banks, 4 large state-owned commercial banks in the country. And their digital currency electronic payment, called DCEP, as they refer to their initiative, is really been baked. So in recent remarks by PBOC Governor Yi Gang, he recently said that all of the top-level design is done, standards formulation is done, functional development is basically complete. And what we know about it is that it's a double-layer operation. It's an M0 substitution instrument, and they've had a design that they refer to as controllable anonymity. So I think that the idea is that it addresses privacy concerns But one of the key drivers, I think, for PBOC as they looked at this next generation of money was combating fraud and bringing a little more control back into the digital payment space, where there had been such rapid innovation in the country. So as I said, they're done with all of the initial designs, and they've been piloting now in 4 different countries, 4 different cities. Sorry, a little slip there. Cities including Shenzhen and the Winter Olympics site and a city near Beijing. So they've been trialing the functionality, process convenience, scenario application. Lots of folks have seen screenshots coming out. But in his recent remarks, Governor Yuan also emphasized that there's no final decision to launch the digital yuan, and there's no timetable for when it will go live. So those are some of the basics, and back to you, Lawrence.
Thanks so much, Conan. If I can throw to you first, James, what are the potential impacts on the Chinese and broader Asian financial system, including commercial banks, of a successful digital yuan trial? And I also wanted to ask you, could the Winter Olympics in 2022 be a possible target date?
Well, thank you, Lawrence. Very happy to be participating, and thanks to Conan for that excellent introduction. Perhaps let me answer the question with a little bit of context first. I think Conan rightly mentioned in his introduction that mainland China has really been, ahead of the pack, I think, in terms of developing a central bank issued digital currency. But equally, if we set that in the wider context, we know from much experience that really mainland China has been ahead of the pack generally when it comes to some new fintech innovation, and in particular consumer and SME adoption. And frankly, that's a consequence of many factors, which we don't need to get into here. But clearly, we've spoken before of the kind of leapfrog effect. In many ways, China was behind, let's compare it to the US or Western Europe, was behind in terms of payment infrastructure heretofore. And then over the past 10 years, players like Alipay, like Tencent, and others have been able to kind of leapfrog past those stages of development we've seen in the West and develop, really quite innovative and scalable financial services and payment and payment propositions. Now, the reason I give that context is, to some degree, CBDC is both a reflection of that leapfrog capability, but also a consequence of it. So specifically, when we think of the Alipays and WeChat Pays of this world and the speed at which they grew, it's important to understand the infrastructure environment they faced in mainland China. Because they were unable to access a central clearing network, for example, they built direct-to-bank connectedness, integrations with all of the major banks in China. So at a central bank, at a PBOC level, it became apparent over the past number of years that there was issues in terms of visibility. So transaction flows were staying within proprietary ecosystems, within walled gardens. And as a central bank, you had some difficulty in tracing and governing some of those transaction flows. So some other steps have been taken, the creation of a central third-party clearinghouse called NetsUnion in China. But the reason I give that context is CBDC, as Conan rightly said, has been something under consideration in China since at least 2014. So it is, again, a leapfrog opportunity, but also a consequence of some of the rapid scaling and development we've seen of financial services in China. So I kind of want to set that context, because oftentimes we've found in recent years, at least, people talking about the China experiment as some sort of response to Libra. And of course, there's considerations there, and there's some similarities, there's some very significant differences. But in practical terms, this development has been ongoing for many years, and it is in many ways a consequence of the unique features of the China domestic system. So anyway, hopefully that kind of couches my response to some degree, because my response to your question won't be nearly as exciting, because in practical terms, we just don't know. I mean, in terms of the impact on the internationalization of the RMB, certainly there are many analysts who are getting very excited about how, a CBDC or DCEP, as it's known in mainland China, could be a shot in the arm of internationalization. It could, result in some lesser reliance on kind of dollar dominance, etc. But in very, very practical terms, this is still at the trial stage. As Conan said, it is being trialed in 4 cities in China. It's quite interesting when you look at those cities and why perhaps they've been chosen. which leads me to your second question. Yes, certainly there have been, I can say, substantiated rumors that the 2022 Winter Olympics, which of course is being held in Beijing, as well as some of the surrounding cities, including Xiamen, which is one of the trial locations. There have been rumors that that is a launch proposition nationally. But equally, I wouldn't get so tied up on individual dates. This is very much a work in progress that has been ongoing for many years, and we anticipate will take quite a longer time to see mass rollout.
Thanks very much, James. Jesse, if I could ask you, the DCEP is marketed or appears to be a retail payments instrument as much as anything. To what extent do you think it'll be confined to retail payments, and to what if it does go ahead, and to what extent would you expect it to be confined to China as opposed to other use cases?
Well, I think that's a very interesting question, Lawrence, and thank you so much for having me here today. I'm delighted to be part of this conversation. I think there's a lot of folks asking this question, and very much to mirror what James said. We don't necessarily know a lot about the DCEP. The PBOC has been relatively guarded in terms of their releases on this. So anything that I have to say on the subject is inherently speculative. That said, I've had some interesting conversations with academics who've been talking to folks about this issue, including some of the folks within the PBOC's Digital Currency Institute. And one of the interesting things that I've heard there is that initially the DCEP had some very ambitious plans for programmability. That is the ability to layer smart contracts on top of this asset. But my understanding is that a lot of those were scaled back because it was necessary to provide interoperability with China's cross-border interbank payment system infrastructure. So there's clearly an appetite, if that's true, for China to provide users of this asset with functionality that perhaps goes beyond China, either in terms of maybe using it externally, using, say, an Alipay acceptance network. That's, again, speculation. Or the other way around, perhaps being able to push money to the interbank payment system and then out to Russia or India or any other country. So I think there's clearly some degree, if this is to be believed, of an appetite to internationalize. I suspect, though, that a subtext of your question revolves around this idea of whether or not this is part of an appetite for the renminbi to play a broader regional or global role as a reserve entity. And I think we've seen strong indications that Beijing has an appetite to, over time, have the renminbi used to denominate trade, at least within the region. And it can be really easy to take these two, payments-related initiatives and kind of put them together. But I don't know that the logic on that necessarily scans. When we think about trade denomination, that's very much B2B flows. And it's really about, the question of whether or not an Indian producer of rice selling to someone in Tanzania wants to accept that, accept the renminbi as their settlement asset. And there's a lot of factors that go into that go well beyond simply the underlying payments infrastructure. And moreover, we've seen no indications to date that the DCEP is really designed to facilitate those type of large denomination flows. Okay. So all very uncertain, but at this time, don't see a direct connection there.
Thanks, Jesse. Camilla, what are your perspectives? And in particular, is there a possible link, say, with the China's Belt and Road Initiative or other retail payment initiatives in Asia?
Yes, so first, thank you also for having me. And thank you, Jess, for starting to speculate, because I think that's what we have to do around this topic. But I think it is opportunities like this that we come together, that we can really throw ideas and like paint, this is how it could go. So I think with the Belt Road project that there is a possibility that China would do mandatory payments in DCEP. And I think also that we can see that the economies in China's economic orbit, that they might feel influenced or suggested to do more in the DCEP currency, or potentially once we have the protocol and the technology stack ready, other countries might be suggested to use it, or potentially peg their currency to a digital DCEP. But also I think important when we're looking at the Belt and Road project, that the 60 countries that are involved in this project, there is a lot of unbanked individuals, but also unbanked small businesses that doesn't have access to currency change. They don't have access to a stable currency. So potentially it would be easier for them to use a DCEP in their business relationships with China. And going back to what Jess said, that there is programmable money. So if the smart money would be used to do dependable, that once X is delivered, Y would be paid there, and then maybe they will build more trust into business relationships. So there is a lot of things that could happen and be knock-on effects once it is established. But Emerging Payment Association is definitely following this project closely. And not just because it is the first CBDC, but also because China have had some extreme uptake on digital payments. And it's such a big part of lives there. And you can see already to Alipay and WeChat that it goes far beyond China's borders.
Okay. I'll briefly, I'll ask James to briefly follow up. James?
Yeah, thanks, Lawrence. I mean, just maybe to echo a couple of those comments, the two questions, one around the kind of international functionality or possibilities around the DCEP, and then secondly, RMB internationalization. On the first, let me just say, I mean, obviously I've been working in China for nearly a decade. I think for a lot of international folks, they always try and consider China in international terms. Okay, what does this mean for cross-border? What does this mean for international interoperability, et cetera? I think for the DCEP, everything we know in the first instance, we really need to consider in the domestic environment. I mean, just the scale of the opportunity from a domestic payments perspective is so great. Even though China is a heavily banked market, we still have about 220 million people without access to formal banking. So there's a lot that can happen, and there's a lot of opportunity and potential in the domestic space. And everything that we've seen to date around DCEP is very much a retail-oriented domestic solution. Not to say there won't be, subsequent additions, et cetera, but I think oftentimes we're a little bit biased internationally as we think about China in our own context. Really, the domestic market is the focus in the first instance. The second point, I just want to absolutely echo Jesse's point. I think a lot of folks get confused around RMB internationalization and some of these topics. In very practical terms, RMB as a future reserve currency, the greater internationalization of the Yuan. These are not technology considerations. This is not a technical fix. There are very significant political and regulatory and capital considerations associated with that. And again, these don't get solved through a new technology like DCEP. So, we also think that's a much more of a longer term ambition and is somewhat detached from this specific topic.
Thanks very much, James. We'll switch gears now and talk about central bank digital currencies more broadly. Camilla, you conducted a study tour of Sweden last year, and you also live in Sydney. So I'd like you to reflect briefly on, how could a central bank issued e-krona add to the payment mix for Swedes, given they already have a very convenient payment system called Swish, integrated with QR codes and digital ID. And turning to Australia, the RBA has launched the new payments platform. So how will that functionality affect Australians' appetite for an Aussie dollar CBDC?
Yes, so if I start with Sweden first, so actually more or less on the day, the study tour to Sweden happened 27th of June last year. And I took the Emerging Payment Association took 12 payments lead from Asia to learn about the cashless society and how Sweden has come to lead the race to become the first cashless country in the world. And during that time, we spent one of the sessions with Riksbanken. And very interesting, because even after 1 hour and going through the background behind it, we all came out and it's not completely clear what will actually a Swedish e-krona bring. And so Riksbanken's standpoint is that the population should have access to risk-free money, that we shouldn't be reliant on private money. Funny, I have to share a short anecdote that it's actually Sweden had the first central bank in the world in 1668, and it came about that it was the commercial bank, Stockholm Banco, had two innovations. They started to take deposits and use those deposits to give financial loans. And that was very successful, but the deposits was short-term and the loans was long-term. So they started to do credit notes for this, was actually Europe's first paper money. But paper was quick to produce, so it created inflation and it all crashed, and the government stepped in and created the first central bank. So we sort of were saying back around, have they learned from history and they don't want to be reliant on private money? But one could argue then that you could insure the deposits instead, and that would actually be a quicker way to do it than create an e-krona. The other leg to it is resiliency. You don't want to be reliant on a private payments infrastructure. What would it be if it's an outage or a cybersecurity attack? That's something that's been very relevant in Australia over the last weeks. But again, I would argue, do you have to create a CBDC for that, or can that be regulated? So I think what's missing is like that, really the cost benefit analysis of it. But there is a project on the go. There is a pilot, not in the way as in China, but they're testing and they have different stakeholders in this pilot, and they will come to a decision in January next year. But for time being, I think, yes, I don't see the obvious reason for Sweden to go with the central bank backed money.
Okay, what about Australia? Do you see any appetite there for a CBDC?
Again, no, and even more so because we have such a good real-time payments network now with MPP, and I think that is the same as you see in other Asian countries that have developing their real-time payments networks. You have that new infrastructure that is very reliant, and if you compare it to a Swiss real-time payments network, NPP is actually can do all different kind of payments. It's not just consumer to consumer or business to business, all the different layers that we know a payments network has to cater for. And next year we see NPP being able to do request for payments. And also we have a lot of innovation that is developed on top of MPP. So that is one reason I don't think that Australia will go down the route of CBDCs. And also Australia just started to print the next generation of cash or money. And in later this year, we will see a new $100 note coming out. So it's all indication that I don't think that we will see CBDC in Australia.
Anytime soon. Okay, thanks very much. Jesse, if I can turn to you, you're a bit of a student of design principles for CBDCs. What design principles do you think CBDCs should adhere to, and what are the key initiatives that MasterCard is keeping track of other than the PBOC trial?
So I think CBDCs are so fascinating, and one of the reasons that they're so interesting is that almost every central bank that you look at has distinct reasons for wanting to consider the exploration of a CBDC. So James already alluded to some of the reasons why the PBOC is interested in this. Camilla talked about the Riksbank, where we see this really interesting debate going on, a lot of papers being published, fundamentally asking the question, is access to central bank money required for financial stability? And then you have a place like Bahamas, where they're exploring this notion of a sand dollar, driven at least in part by the fact that it's incredibly expensive to move physical cash between 30 populated islands in 5,000 square miles of ocean. And so different countries, different challenges. But I think that while obviously there'll be unique customizations required for any one of those CBDCs, that there are particular principles that any CBDC should adhere to in order to maximize its benefit for consumers. And the first and I think this is very much aligns with what Camilla was talking about, is making sure that a CBDC is the right tool for the job. If you conceive that the challenge that you have is that you need to provide some form of central bank money and people don't want to use cash anymore, if you've decided that that's a requirement for your society, then you can only do it with a CBDC. In other cases, though, if you're focused on financial inclusion, if you're focused on reducing the cost of cash, it might be possible to achieve that with less disruption to the monetary system, at lower cost of experimentation, through the implementation of a new real-time payment system, for example. And that choice of what's the right tool for the job is a decision that each central bank is going to need to make for the unique context of their country. The second is capitalizing on the complementary capabilities of the private sector and the central bank. Central banks are uniquely reliable entities. They sort of literally own the printing press for money. And I think that positions them uniquely to be the establishers of reliable infrastructure for the issuance of these assets, similar to the role they play in most countries with their RTGS system. But I think that there's also a set of capabilities in the private sector around competition, innovation, the delivery of many parallel ways of accessing payments, each suited to different subsets of the population. And so I think that two-tier systems, like the one proposed by the Bank of England, that really think of the central bank as a platform with the private sector on top, are really potentially much more valuable over the long term for consumers in terms of providing extensibility, new capabilities, and great customer experience.
Okay.
And then the final thing that I think is really important here is customer education. The customers have to understand where a CBDC fits in the pantheon of money and other payments. When you make a payment with a debit card, with a credit card, with an ACH, with cash, they have different types of protections that they offer. And so whatever protections get layered onto a CBDC, it's going to be absolutely essential to make sure that consumers understand how those protections stack up to the other forms of payment that exist in their physical or virtual wallet.
Sure. Look, I'll throw to James. If we get time, I'll come back to you on this question of the initiatives that MasterCard is tracking. James, do you mind updating us briefly on Project Interoperability and the recent follow-up announcement from the Bank of Thailand? And also, leaving aside China, what are the central banks you consider most likely to roll out a digital currency in APAC or Middle East?
Sure. So maybe briefly, actually there was Project Interoperability in Thailand and Project Lion Rock here in Hong Kong. Interoperability, Lion Rock, both being kind of respectively high mountains in each jurisdiction. Really, it's a wholesale funds transfer CBDC trial, proof of concept. It's been underway for a couple of years. In fact, there's been various phases, and just last week, it was announced that having gone through a kind of a successful proof of concept with a number of banks in Thailand, a number of banks here in Hong Kong, that they will be progressing to a second stage in terms of trying to build out, as I say, really it's a wholesale solution for, in relation to currency and funds transfer. So a little bit different, not a retail proposition. But I would say probably worth emphasizing in this conversation because it's very much predicated on interoperability. And just as I mentioned earlier, when we think of the mainland experiment right now, we really believe it's very much a domestic-focused proposition for now. Project Lion Rock and Interoperability working together, the Hong Kong Monetary Authority with the Bank of Thailand working together. It's very much about cross-border. It's very much wholesale. So quite different, quite interesting, with pretty strong commitment from the central banks in each jurisdiction. So certainly one to consider. Look, to answer the question, who else is looking at CBDCs? I mean, I think to some degree we need to avoid there's quite a lot of buzz and hype on this topic. I mean, I think Jesse kind of alluded to it earlier, but in one sense, everybody is looking at CBDCs because everybody else is. Clearly Bank of International Settlements, they consider this a very hot topic. I know they've been facilitating a number of discussions at a kind of group level. Here in the region, I would say perhaps some of the Some of the names to consider, of course, Singapore with Project Ubin has been looking at some of the underlying technology. Actually, Cambodia has been quite far advanced in its thinking around. I made note of the project Backon. I never remember Backon. I'm not sure it's a mountain. I better check what Backon refers to. So there have been a number of initiatives in Korea. There's been renewed interest, of course, and there's some significant government-led studies underway. Japan, of course, again, has been recently announced that they are conducting study into CBDCs alongside the Bank of England and others. So, I would say that to some degree everybody is. I think I would echo Jesse's point earlier on insofar as like what specific problems are we seeking to solve? And I think Camilla had a really good point earlier, which perhaps we can come back to. In many ways, when you see the use cases or the objectives for some of these CBD studies, it really speaks to, shouldn't we be spending more time modernizing and improving the existing domestic and cross-border payments infrastructure, actually just investing in some of those existing capabilities and uplifting them in certain jurisdictions is likely to have at least the same, if not a greater impact in the short term.
If I can switch gears again or change topics to global stablecoins and wholesale settlement coins, two obviously separate topics, but we'll probably focus more on global stablecoins in this discussion. And Libra is the obvious gorilla in the room, I suppose. Libra 2.0 was published in April. The FSB also published its consult document a day later or a day before. So there was clearly quite a lot of coordination there. If I can turn to you, Camilla, first, do you think the Libra Consortium's revised proposal is close to addressing the concerns that the G7 and the FSB have articulated?
I think it's two sides to it, but I definitely think that in general, people were quite surprised about how far they came with Libra 2.0. And it addressed a lot of the issues, especially around compliance and regulations. You can see Libra has done some really strategic hire. They got Stuart Levy, the ex-chief legal from HSBC on board, and also Sterling Danes from Credit Suisse, who was leading the criminal fighting criminals within the Credit Suisse. But I think also that the whole swift going from decentralized to being more centralized and to actually taking this with the stable coin has created a currency or a solution that is much more adaptable for other countries. And also we see with the investment from Temasek in Singapore, so the sovereign fund is sort of showing that people are accepting in the direction they are going, because Temasek would have gone through a lot of scrutinies to look into how it's regulated and set up.
Yeah.
So I would say yes, but we still have big issues around the privacy and how it's affecting stabilization, financial stability in the world. So I think the remaining issues are more on the political side than it is on actually the structure of the protocol.
Thanks very much, Camilla. Jesse, you're a member of the Digital Dollar Project Advisory Group in your personal capacity. What are the objectives of the project, briefly, and also what is MasterCard's potential role in any implementation?
Yes, that's correct, Lawrence. I sit on the Digital Dollar Advisory Council in a personal capacity. I think it's a really interesting initiative with a really wide-ranging set of goals, interested in looking at how a digital dollar, most likely tokenized, though potentially also considering versions of it that could be account-based, that would be useful in in retail use cases, in wholesale use cases, such as enabling more efficient securities settlement, as well as in cross-border use cases. And so really running the gamut from thinking about the potential for a digital dollar to transform aspects of retail payments and access to payments within the United States domestically, all the way through to how a digital dollar could play a role in helping preserve the dollar as the world's dominant reserve currency. And so really, I think that's an initiative that's just kicked off. It's about bringing the dollar into the next century, if you will, but without yet a clear point of view on how to do that. By contrast to something, say, like the Bank of England's recent discussion paper, which has a very clear and focused model for what it's looking to deliver and how it would roll that out were it to choose to pursue it. In terms of MasterCard's role, as I said, there's a personal engagement and there's no specific intention for collaboration at this time, but MasterCard is closely looking at and excited to see how we can help support CBDCs, both in the United States and around the world. There are a number of ways in which we're thinking about doing that. One is, how do we potentially leverage our global acceptance network in order to help a CBDC be accepted at merchants online and in person, domestically and around the world. I think that's potentially really would help CBDCs with that day one usefulness to consumers. Thinking about how we might use our considerable analytic capabilities in terms of providing a variety of services, both analysis of payments for the central bank, but also preventative scanning around fraud and cyber attacks. And then finally, if you think about a platform-based model like the one that's been articulated in the Bank of England's discussion paper, I think there's an opportunity to think about how private players like MasterCard could play a role in delivering value-added services on top. And so you could think about things like programmability, smart contracts, micropayments being enabled by third parties in a layer that's quite separate from what the central bank is delivering. And that might be useful both in terms of diversity of competition for those services, but also minimizing the threat surface for the underlying central bank asset and creating that kind of important separation between value-added services and underlying monetary infrastructure.
Thanks. If I can turn to you, James, and I believe you're now on phone audio. Is there a possible role for privately issued stable coins denominated in offshore Yuan or CNH?
That's an interesting question on which I will probably plead the international equivalent of the fifth. I mean, I think in practical terms, interoperability will be especially relevant in this space in the next phase. But personally, I think we're quite far from that at this point. As I say, the DCEP initiative in China is very much a top-down government-sponsored, PBOC-led initiative. That has been the driving force in the digital currency space in China over the last few years. I think the likelihood of private equivalents emerging and being permitted to interoperate with that are relatively low in the near term, as it is, frankly, in other markets. Again, it's a little too far out to speculate. I think perhaps one thing that we can speak to is the interoperability of some of these domestic, either government-backed or kind of quasi-private facilities in other markets. Will we see interoperability across border? And again, kind of Jesse's alluded to that already. I think that's an area that we're spending quite a lot of time thinking about.
Thanks. And I guess, James, if you could draw a link maybe between Libra and CBDCs, and perhaps I can ask Camilla also to chime in here. What is the link? Are they completely different, or is is the Libra proposal giving CBDCs some kind of impetus that they wouldn't otherwise have?
So, I mean, I can certainly, I need to be a little careful what I say on this topic for various reasons, but I think in practical terms, I think it is fair to say that Libra's initial Libra 1.0 announcement took many folks by surprise, many central banks, many governments, many regulatory bodies. And as a consequence, for sure, we saw a very immediate response, I would say, from, I mentioned BIS earlier, and a number of their subsidiary, or I shouldn't say subsidiary, but a number of their member central banks. Clearly there was, if it's diplomatic enough to say, there was a little bit of a scramble to respond in some instances and from some quarters. I think even in the China case, it clearly resulted in perhaps a renewed outbound communications in relation to DCEP. It was not a spur or an impetus for China. They were already relatively far progressed, but certainly it did result in perhaps a renewed focus in terms of communication. So I think maybe I'll leave it to Jesse or Camilla to speak to whether it's a fair description to say there was a scramble in some quarters, but Libra 1.0 certainly resulted in some deep consideration at a regulatory level in many major economies. I think, frankly, the impact of that is nowhere better seen than in what Libra has now become. Libra 2.0 is a very, very different creation than what was originally planned. And, you know, much of that has been a consequence of the regulatory response.
Mm-hmm. Camilla?
So I think one thing to take into consideration, how would it have looked that it wasn't Facebook that issued Libra? I think, I mean, Facebook already had all the controversial around it with the Cambridge scandal and all. They already had so much issue around privacy. So it came from a player in the market that people already had opinions around. What if it had been a sovereign fund, or what if it had been even maybe another institution that people had more trust in? But of course it is the back on that I mean, you'd be hard to find other organizations that has such a wide reach into grassroots and SMEs and so on. So what I think is that Libra definitely put a kick in the gear for a lot of central banks to start to look at this seriously. And also maybe it was slightly hasty how people did it. So what I referred to before, that like, what are the options? I think there is a scale of different options from going from a full-blown CBDC and a Libra, like when it's vast majority, and we see that already now with Libra 2.0 being so different from a Libra .1.
Thanks. Jesse, if I can ask you an unscripted question, if you don't mind. In the US, how does the sort of impetus or otherwise from Libra play out with people that you talk to at the Fed? How much appetite does the Fed really have to move towards a digital dollar?
Yes, so I don't know. I think that's a little bit difficult to say. I think that we clearly saw from Jerome Powell's recent congressional testimony an indication that he had a rather limited appetite for the Federal Reserve to engage in a digital dollar as constructed with the Fed directly providing services to end users. You know, one of the jokes that I often make is that I've yet to meet a central banker who really wants to set up a call center to deal with customers who are confused with how to use an app. That's not within the traditional remit, certainly, of a central bank. And we haven't really seen indications, or at least I haven't seen indications, that there's an appetite on the part of the Federal Reserve to do that. However, I think you can clearly look at initiatives like FedNow and see that the Fed has a continued appetite to play an active role in the facilitation of payments and the development of payment infrastructure within the United States, simply not at the level of direct provision to consumers. Okay. That said, all of this is open to change. So it's a very fast moving and fluid space, I think we could fairly say.
Thank you. So again, switching gears, and appreciate we're only 15 minutes from the end, to talk about retail payment innovations in Asia. Camilla, if I can ask you briefly, what are the most salient things you're seeing? For instance, do you expect WhatsApp to follow up on its Brazil launch with a similar payment service in Asia? What is the significance of Facebook and PayPal investing in Gojek, the Indonesian ride-hailing service?
So it's very linked. So I'm just going to add one thing to the last question, and is what we're talking a lot about when we go into political also is cross-border payments, because we do know it's such a huge value. I think it's like 3 trillion goes through the SWIFT network every day. And of course, remittance and small business transactions are not that a big part of it. But when we're looking at what's happening in Southeast Asia and what Libra and what WhatsApp did in Brazil, they are really going for that small to medium business transactions. and then it is a great tool. And that's what we've seen also, that's been developing so much in Southeast Asia. We saw the huge uptake on Grab and Gojek and going in the same trajectory. So Gojek is the taxi, when you get taxis in Indonesia, that now has developed into a complete financial ecosystem and has millions of users. And could that actually then be the next payment system? And seeing that both Facebook and also like one of the first participants in Libra, like PayPal, that dropped out, is now also invested into Gojek. So you can see some sort of collaboration going on that could be that last mile of usage of a digital currency. And we see a similar development in India, where Facebook has invested in Adhere, which is a telecommunication provider. And also it has like thousands of users, and India being one of the biggest countries for remittance. So is it a play on that cross-border payment and how to solve that? And I think cross-border payments is one of the big issues we have in the payments industry. Like, it is just not so much has happened. Of course, we've seen companies like TransferWise coming out, and we're seeing a lot of play on digital also with companies like Ripple, but it is an issue that needs to be solved, and it's lots of money in it. So I think we'll see lots of development in there, and I do think that WhatsApp and Facebook will be part of it.
Thank you. James, turning to these digital ID schemes that we see in Hong Kong and Singapore, can I ask you whether you expect them to be leveraged in payment services? So I'm talking about Hong Kong's IAM project and Singapore's National Digital Identity Platform, an extension of the SingPass authentication system.
Sure. I mean, maybe just very briefly on that previous question. I mean, obviously, I've been speaking a lot about China. I mean, I cover Asia Pacific, so I think it's interesting to consider perhaps the differences between mainland China and some of the other major markets in the region. I mean, this ties in, you know, Libra's stated ambitions to really drive financial inclusion and some of the other points that Camilla mentioned, particularly around last mile and so on. I think it's important to remember that China, even though they do have perhaps 220 million unbanked, I mean, actually as a developing market, it's relatively highly banked. It's about 80+%, 85% these days. Whereas if you look at Indonesia or India and some of these other markets, you know, we have real issues around basic financial inclusion, access to basic savings products, financial payments infrastructure, and so on and so forth. So in very practical terms, I'm always a little bit wary when we hear big tech or other players talk about how they are going to institute financial inclusion, because it is that last mile issue. It is integration into those, you know, those micro SMEs, some of the cross-border remittances, etc. These are hard problems to solve. They're government problems. They're international development problems. And I think we always have to just consider the implications of that for some of these kind of so-called technology fixes. In relation to digital ID, I mean, I'm happy to kind of name check David Birch in this regard, who I think has spent a recent career talking about, you know, payments is the easy part. Actually, you know, ultimately, this is all about identification. This is all about ensuring that, you know, whether it's domestic or cross-border, that you have those identity rails upon which, you know, transacting zeros and ones is very much straightforward. So, you know, the initiatives you mentioned in Hong Kong and Singapore, we've many others in the region in various stages of development. That's the hard part. And I think perhaps that's where some of the leaders in this space are spending a little bit more time thinking about. The transaction itself is relatively secondary.
Okay, thanks. While I've got you on camera, I'll ask you an audience question that we did receive. The PBOC is already able to extensively track and monitor payments. So what does a DCEP add, I suppose, to that from their perspective?
Well, I mean, I would say most central banks and indeed government agencies are able to extensively track electronic payments. I mean, that's part of the thesis, frankly. So I think that's probably a fair assessment. In terms of what DCEP would add, you know, clearly there's a bit more of a direct monitoring perspective from a central bank, perspective. It's a bit more of a direct line of sight. There's offline interoperability ostensibly with DCEP, such that you can actually transact between two phones without any kind of Wi-Fi or internet connection. I think probably one of the main things that we've been thinking about in this space is more around what it means for effective kind of so-called online monetary policy. And really that's what this comes down to. This is not, the Chinese DCEP initiative is not to replace, the Alipay or WeChat Pay or indeed Union Pay infrastructure. We think it sits quite comfortably alongside it with perhaps a different overall objectives. As to the interplay of those different regimes or rails over time, again, as Jesse says, we can but speculate. But ultimately, I think we're coming at this from a different perspective. It's not so much can we increase direct monitoring, I suppose, to the question, but it's, what's the liquidity monitoring, the settlements, the external payment positions? I mean, what are the kind of monetary policy implications of having that greater visibility? So I would say, it's interesting to consider in relation to kind of traditional retail rails, retail payment rails, but it's not necessarily directly comparable.
Thank you. So Jesse, turning to you briefly, to what extent is digital ID a necessary part of any successful government to public payments initiative? We've seen a lot of these in the wake of COVID, governments effectively trying to get cash to retail wallets. How important is digital ID there? And also, how can the private sector play a role in fostering interoperability of sovereign and digital ID schemes, or can it play a role?
Yeah, that last one's a tough one. I think I'll echo a lot of what James said here, that firstly, I think that digital ID is incredibly important. It's incredibly important to putting users in the center of their digital experiences, making their identities secure and putting them in control of their incredibly valuable data and the payments that's associated with that. And I think it's also often a lot of what is broken when we talk about the difficulties of getting payments to people. So if you look at some of the frustration around the recent CARES Act, it's not actually fundamentally a problem of the payment rails moving the payment, but rather that if you don't know who's supposed to get the funds, or you don't know where to send the funds for that person, then the fastest payment system in the world won't take you there. And so I'm a little bit skeptical and think that sometimes people are missing a step when they say, oh, well, we need to do these types of distributions, so we need a CBDC. Really, you don't just need a CBDC, you also need a system for knowing who owns those accounts. And you need those accounts to be ubiquitous, neither of which are small undertakings, and which also run into some challenges when you think about how do you, on one hand, maintain the type of anonymity that people are often looking for within these systems, and balance it with the need for compliance and the need to meet these G2P disbursement requirements. That's a really tricky problem to optimize for, and you're necessarily going to need some trade-offs. Okay. And then finally, in terms of interoperability, I think there are a lot of roles that the private sector can play in this space, but fundamentally, I think you need to achieve critical mass with domestic schemes or with some type of affinity schemes before you can really start to think about creating connectivity between these sorts of plays.
Okay, that's useful. Do you think there might be a role for a body like the International Organization for Standardization in this particular space? I can throw that to anyone on the panel who wants to answer that.
I mean, I think standards are clearly important to fostering interoperability. Whether the ISO is the right entity for that, I think depends on where we start to see the kind of killer use cases for identity. If we start to see that financial services is really the starting point for this, might be that the IMF or the BIS or some other plays an important role in shaping it. Some sort of international payments association could all play a role in that. So I don't think we should necessarily hone in on the ISO as the only entity that could deliver that, but clearly standards, as in payments, incredibly important.
Any other views on that?
Yeah, I would love to add something on that, because so as being a payments association, and we're having two projects now. We're having a project around digital identity, and we're having one around cross-border payments, among others. They are just being issued now. And And especially the digital identity actually stemmed out of the project that we ran last year, which was Open Banking Asia. We did that together with the APFF, so the Asia Pacific Financial Forum. And one of the findings was the need for a digital identity across the region and where to start with such a conversation. So that's what we're doing now. We're doing the Digital Identity Project. And we just kicked it off actually last week with the first webinar. And very interesting, we had a polling question there, and it was, should a digital identity be centralized or decentralized? And we had about probably 100 people or something on the call. And the people that comes on our call is now very niched. And anyway, it was 68% thought that a digital identity should be decentralized, which was a big takeaway for us and something that we're having as an input to the project. But also it's such a fundamental stone in everything we're doing in payments now to get the digital identity right, because so many panels comes back to us. We can't go further before we have a digital identity scheme that is usable cross-border. And of course, it is also a big part in the cross-border project, which we're doing together with FSB out of Switzerland, where they have a piece that is around digital identity in their project around cross-border payments. So, so much to come on that space from us.
Thank you. I've got my eye on the clock. There's 3 minutes left. So I'm going to throw to my colleague Conan French in Washington, who, by the way, is a former US Treasury official, just to talk through some forthcoming events that we have lined up for your enjoyment and education, hopefully. Conan.
Thanks very much, Lawrence. And congratulations to everybody today for doing a great job of covering a lot of the different topics that come together on this Future of Money thread. So we have, as you'd mentioned, Lawrence, a few places where we've been addressing these topics, and also how the COVID-19 crisis is driving some of these cashlessness trends and intersecting with the things that we've been talking about today. So on the IF website, we have our recent submission to the Bank of England on their excellent CBDC paper, where we offer a comment on issues like the potential for bank disintermediation, depending on the design and design considerations taken into effect. We have a money redesign series that we've recently launched, and the first paper is up on the site looking at that disintermediation risk, and we'll have another paper coming soon, so stay tuned there. We'll also have our consultation, or our response to the FSB consultation on global stablecoins, which we'll be coming out with in July. Coming up on the IF webinar series that you've dialed in today, we'll continue to have different sessions optimized for different time zones. So as you can see, coming up, we'll have a session on open digital trust, and this will be a video-enabled format for more of a demo from the OpenID Foundation and their developments there. So you heard Jesse mention interesting and important developments in identity, and that will take that topic forward. We'll also have a session with Oliver Wyman, where we'll look at some of the initial findings of a global data and privacy study that they've been doing around COVID-19 and contact tracing, and how that's impacting the perceptions of data sharing and privacy, and some of the impact that that might have for back to work. So that session will have Doug Elliott from Oliver Wyman sharing the findings, Brett House, Deputy Chief Economist at Scotiabank, talking about what that means for recovery scenarios, and David Hardoon, who's a senior advisor now at the Union Bank of the Philippines, talking about some of the privacy and data issues. Back to you, Lawrence.
Thanks so much, Conan. Well, thanks everyone for tuning in, and thanks very much to our distinguished panelists. For me, some of the key points were just how much is going on in this space and how quickly. Some of the, I guess, interconnections between geopolitics on the one hand and technical issues, technical fixes on the other, the possible role of international standards, and in particular, the theme of interoperability that continues to crop up. So I'll just close by thanking everybody and wishing you a good morning and good evening. Thank you.